You've probably heard that the richest man in the world, Jeff Bezos, is worth around $192 billion as of late August 2021. But what if I told you he doesn't actually have that amount of money? How come? So, over the last few months, you may have seen the numerous news articles describing Jeff Bezos' mind-boggling fortune, which has made a lot of people on TikTok wonder, couldn't everyone be rich if he shared this enormous wealth out?
Think about this. Jeff Bezos is worth $193 billion. There are 7 billion people in the world, meaning he could give everyone $1 billion and still have $186 billion left.
Apart from demonstrating that Americans struggle with pretty basic maths, this video also shows off the fairly common misconception that net worth is just equal to how much you have in your bank account or the amount of cash you might have stashed in your mattress if you aren't a fan of banks. In reality, a person's net worth is actually a little bit more complicated and is based on the total value of an individual's assets, such as their bank accounts, securities, properties, and commodities, minus their liabilities such as outstanding debts on their house, car, credit cards. You get the idea. Now, that isn't to say that the richest man on earth doesn't have a lot of money in the bank. He clearly has enough to blast himself into space on a giant, questionably shaped rocket, but the vast majority of his wealth is actually derived from the 51.3 million shares of Amazon that he currently owns. Stock in a company and cash are pretty different assets. For a start, Amazon stock isn't legal tender, so you can't just pay for a new house or a car with a few Amazon shares. Also, stocks aren't as liquid as cash, and they suffer from volatility, meaning their day-to-day price fluctuates quite a bit. So if Jeff Bezos doesn't have $192 billion, how much does he actually have access to right now? And how much might he have if he decides to sell the rest of his 51.3 million shares? Okay, so when tackling this question, I'm going to be focusing on how much money Bezos has as liquid cash, either physical or in a bank account. Now, technically, cash assets also include marketable securities, and Amazon shares would normally qualify. But as Bezos is a company insider, things are a bit more complicated. Starting off, Bezos has earned a yearly salary of around $80,000 when he was CEO, which is only triple that of the workers in his warehouses that have to pee in bottles because they aren't allowed toilet breaks. In addition, he earned another $1.6 million from other types of compensation from Amazon. So far, it would appear that Bezos is doing pretty well for himself, but not quite billionaire level yet. So where are the big numbers? Well, since Amazon's IPO on the stock market in 1997, Bezos has sold off or given away more than half of his initial shares. He has sold some of his shares almost every single year since 1997, reaching a peak in 2010 where he sold 6 million shares in a single year for around $793 million. Since then, Bezos has offloaded fewer shares every year, but has received more money each time thanks to an explosion in Amazon's share price, and as of mid-2021, Bezos has made a grand total of around $27 billion. Now, let's take a look at some of his expenses to figure out how much of that he still has, starting with everyone's favourite, taxes. Okay, so the money he's made from selling his shares would be subject to long-term capital gains tax, which in the US has a current top tax rate of 20%. So on the $27 billion he's made, Forbes estimates that Bezos has paid somewhere between $5.4 and $6 billion in these taxes, assuming he didn't use any tactics to reduce this. Moving on, let's look at the things he's actually bought. In 2013, Bezos purchased the Washington Post newspaper for $250 million. That's a lot of money, but incredibly, it was only 1/3 of the $711 million he made from selling Amazon stock that year. He's also bought a lot of property, including, but not limited to, a palatial mansion in Beverly Hills, a luxurious apartment in New York City, various homes in and around Washington, D.C., and a 300,000-acre ranch in Van Horn, Texas, which serves as a base of operations for his private space company, Blue Origin. In total, he has spent at least $669 million on property holdings, which will likely only appreciate in value. On the topic of Blue Origin, since it was founded in 2000, Bezos has personally invested a lot of his money into this private space venture. He's not publicly stated how much he's spent, but industry estimates put it in the region of around $7.5 billion, making this his single biggest expense to date. Like pretty much everyone that's wealthy, Bezos has also spent a lot of money on toys such as a $65 million private jet and a custom-built 417-foot super yacht which will cost over $500 million when it's completed. What about charity? Well, Bezos has long been criticised for skimping on charitable donations. While he's gifted some Amazon shares to charity over the years, he's only recently embraced big philanthropy. Since 2018, he's pledged $12 billion to launch his own charities, the Bezos Day One Fund and the Bezos Earth Fund. The former is geared towards creating a network of non-profit schools in low-income communities, and the latter will give grants to organisations fighting climate change. However, of the $12 billion pledged, only around $1.1 billion has actually been given out to date. Including pre-2018 donations, it appears Bezos has donated around $1.5 billion of his immense wealth. Lastly, let's also take his yearly living cost into account, which includes stuff like food, travel, maintenance, etc. Let's say that's around $100 million per year, which is just a complete guess because this is just a casual YouTube video. So of the $27 billion he's made since 1997, that would mean he still has around $8 billion in his bank account after taking taxes and expenses into account. With that kind of money, he's basically the real-life Scrooge McDuck. In the last part of this video, I'm going to try to answer this question. Firstly, in the scenario where he's smart and sells off his remaining holdings slowly over a period of 20 years to maximize his payout, and then in the scenario where he decides to unleash his inner supervillain and sell all of his remaining stock in a single day, which would definitely tank Amazon's share price and would have knock-on effects on the wider stock market. In this smart but relatively boring scenario, Bezos would make a truly unimaginable amount of real money. In fact, he would probably become a trillionaire, perhaps even the world's first, just from the sale of his Amazon stock. Thanks to an explosion in retail sales during the pandemic, coupled with an increasingly profitable cloud computing division in AWS, the future appears very promising for Amazon. Predictions of its future stock price vary significantly between analysts, but a 20 to 25% increase over the next 12 months appears to be very reasonable, with many analysts considering the company to be currently undervalued. In order to factor in potential reductions in future growth and the inevitable bear markets that will ensue, most long-term share predictions I can find seem to assume a compounded annual growth rate of around 15%. However, it should be noted that the stock market is notoriously unpredictable, so take these estimates with a giant pinch of salt. Since Bezos has already offloaded over 1.5 million shares this year, let's assume that he starts selling again next year, and he sells 2.565 million shares each year. In this case, he would make $70 billion by 2026, $210 billion by 2031, and 20 years from now in 2041, he would have made a grand total of over $1 trillion. For some context, that is so much money that even if he was somehow able to spend $100 every second of every day, it would still take him 335 years to go bankrupt. In a scenario where Bezos unleashes his inner Dr. Evil and sells all of his remaining stock in a single day on the free market, mayhem would probably ensue. But could he even do it? Well, as Bezos has a significant stake in Amazon and holds a senior position, he is classed as a company insider, which means that selling his Amazon stock comes with red tape. The US government requires all insiders who buy or sell their company's stock to publicly declare this within 48 hours. While this doesn't prevent Bezos from selling it all off, it means that everyone will know about it shortly afterwards. In addition, Bezos would have to follow the company's insider trading policy, which would limit when he could sell his shares to specific times in the year. He might also need board approval in order to make such a large sale, although this probably wouldn't be an issue as he is its chairman. Assuming he's got the green light, what happens next? Well, he wouldn't be able to list all 51.3 million shares for sale at once, as the sheer volume of shares would disrupt the stock exchange's trading algorithms, triggering a temporary trading halt. So instead, let's assume that he sells a few million shares every hour to reduce the risk of trading halts. Now, this scenario is full of speculation, but one thing that's for sure is that Amazon's share price would drop in a spectacular fashion. But why? Well, considering the basic economic concept of supply and demand offers a simplistic explanation. The normal daily trading volume is around 3.5 million shares per day. If Bezos injected 51 million shares into this system, this would increase the volume at least 15-fold. With this massively increased supply, the share price would plummet until there is enough demand to meet the supply. So how low would the share price go? Well, that's really difficult to predict. So let's look to examples of massive sell-offs in the past, such as the Wall Street crash of 1929 for some indication. At the beginning of the Great Crash, the American stock market experienced a record loss of 12.8% on Black Monday, followed by a further 11.7% loss the next day due to immense selling pressure. Similarly, the relatively recent pandemic-related crash of March 2020 saw the market lose around 22% of its value over the course of a few weeks due to heavy selling pressure. We should also consider that during Bezos' last sale in May of 2021, Amazon's share price dropped around 5% over the course of a week following the sale of a comparatively measly 1.6 million shares. Taking all of this into account, an intraday drop of 35% with further losses over the following few days appears reasonable, perhaps even conservative. However, due to Amazon's strong fundamentals and promising future, it's likely the company's share price would rebound quickly over the following weeks as people capitalize on the heavily discounted share price. Interestingly, this situation would have a bearish impact on the American stock market as a whole due to knock-on effects such as institutional investors being forced to sell shares of other companies to cover their losses on leveraged Amazon positions. These bearish consequences have been seen before during the whole GameStop incident earlier this year. As for Bezos, assuming he was able to offload the shares at the discounted rate, he would still rake in almost $150 billion, which is more than 75% of his current net worth as liquid cash. This would mean he loses the position of the highest net worth individual, but with $150 billion liquid dollars in the bank, one could argue that he would actually be richer than he is right now. If you've made it to the end of the video, I just want to say thank you for your attention and I hope you found this interesting.